This is Dollar Logic, where we break down the hidden logic behind money, business, and the systems that shape your everyday life. No jargon, no fluff, just clear answers. You open your banking app on payday, ready to see your first real paycheck, and the number staring back at you is smaller than you expected. You did the math on your hourly rate or your salary, but somehow a chunk of it just disappeared. So where did it go? Today we're breaking down exactly what gets taken out of your paycheck and why. First, there's a difference between your gross pay and your net pay. Gross pay is the number your employer agreed to pay you, your salary or your hours times your rate. Net pay, also called take-home pay, is what actually lands in your bank account after everything gets deducted. For most first jobs, that gap is bigger than people expect. The biggest deduction is usually federal income tax. The US uses a progressive tax system, meaning you don't pay one flat rate on your entire income. Different portions of your income are taxed at different rates, from 10% up to 37% for the highest earners. Before any of that applies, though, a standard deduction reduces the income that gets taxed in the first place. For 2026, that's just over $16,000 for a single filer. So your very first dollars earned each year aren't taxed at all. Next comes FICA, the Federal Insurance Contributions Act. This covers two things: Social Security taxed at 6.2% of your wages and Medicare taxed at 1.45%. Your employer pays a matching amount on top, though you never see that part, it just doesn't show up as extra in your check. Together, Social Security and Medicare take a combined 7.65% off nearly every paycheck, no matter how much or how little you earn. Then there's state and local tax, and this is where things get very different depending on where you live. Most states charge their own income tax on top of federal tax, but 9 states, including Texas, Florida, and Washington, charge no state income tax at all. So two people earning the exact same salary in different states can end up with noticeably different take-home pay. Let's walk through a simple example. Say you earn $40,000 a year at your first job. After the standard deduction, only a portion of that is actually taxed, and it's taxed progressively, the first slice at 10%, the next slice at 12%, and so on. Add the 7.65% FICA tax on top, plus whatever your state charges, and your real take-home pay often ends up somewhere between 80 and 88% of your gross salary, depending on where you live. This is also why your first job asked you to fill out a W-4 form. That form tells your employer how much tax to withhold from each paycheck throughout the year, based on things like your filing status and whether you have a second job. Fill it out inaccurately, and you could end up owing money at tax time or overpaying and waiting months to get it back. Speaking of getting money back, a tax refund feels like a bonus, but it isn't free money. It simply means you paid more in withholding throughout the year than you actually owed, and the government is returning your own overpayment. A giant refund might feel good, but it also means you gave the government an interest-free loan with your own money for 12 months. Some paychecks have other deductions too, like contributions to a 401(k) retirement account or health insurance premiums if your employer offers them. These are optional in most cases, but they can lower your taxable income even further since many of these contributions come out before taxes are calculated. So what can you actually do with this information? Look closely at your pay stub every time you get paid, understand what each line item actually is. If you consistently get a huge refund or end up owing a lot at tax time, that's a sign to review and adjust your W-4. Small adjustments now can mean more predictable paychecks throughout the year. Your paycheck isn't shrinking because of some hidden fee. It's a predictable system of taxes that fund programs like Social Security, Medicare, and public services. Once you understand where every dollar goes, that first paycheck stops feeling confusing and starts feeling like something you're actually in control of. That's how it actually works. Understanding money doesn't have to be complicated, it just has to be explained clearly. If this helped, subscribe to Dollar Logic for more videos that make sense of the systems around your money. See you in the next one.